Hello traders, you are watching the weekly Forex report by Liteforex. From this video, you will get the outlook for the main currency pairs for the upcoming trading days. The US dollar strengthened last week, as you can see from the weekly chart on the US dollar index. Here is the bullish candlestick. American currency rose as a safe haven as trade tensions between the United States and China intensified. China increased tariffs on Chinese imports, and China said that trade war makes their country only stronger and said that it would retaliate. And as a result, rhetoric from both sides has become more heated, and it is clear that a trade deal won't happen anytime soon. Donald Trump will meet Chinese president only at the end of June at the meeting of G20 nations, and until then the resolution of the trade conflict is not really likely. This makes investors search for some refuge assets, and the USD is the measure of them because of relative strength of American economy. Last week, it became known that American consumer sentiment got to 15-year high, and although the majority of the data were collected before trade war escalation, still American economy looks relatively attractive. This week we will get more information about the US statistics. Let's have a look at these and other data releases in the economic calendar at liteforex.com. So Monday is not so eventful, the bank holiday in Canada, some speeches. Everything will start on Tuesday with the speech of the Federal Reserve Governor Powell. His comments about the USD will be closely watched. Then the Reserve Bank of Australia will release its policy meeting minutes. And given the fact that Australian currency has been very volatile recently, traders will closely watch this event. Britain will release inflation report hearings. The members of British Parliament will discuss inflation and the outlook for British economy. And this might have an impact on the pound. And there will be speeches of Fed members Rosengren and Evans. On Wednesday, keep an eye on retail sales from New Zealand. As you can see, the forecast is weaker than the previous reading, and that may increase the pressure on the New Zealand dollar. As you remember, the Reserve Bank of New Zealand cut interest rate this month, and as a result, we can expect that if the economic data continue to disappoint, the New Zealand dollar will suffer more. Australia will release construction work done, and there will be a speech of RBA Governor Lowe. And Britain will release CPI figures that may move the pound. However, any reaction to British economic data will be short-lived, as traders will then quickly switch their attention back to Brexit and all that related to it. Canada will release core retail sales, and this is an important piece of news for everyone who trades various currency pairs which contain Canadian dollar. And finally, during the US session on Wednesday, we will focus on FOMC meeting minutes. In May, American Central Bank gave no hints of rate cuts this year, despite the expectations of some analysts. And the meeting minutes may give us more information if we see that some members of the Fed want to reduce interest rates. This will lead to a bearish correction in the USD. If we see that no members of the Fed consider rate cuts, then it will be another factor to push the US currency higher. On Thursday, the focus of the day will be on European PMI indexes. Germany, France, and the Euro area will release manufacturing and services PMIs, and this will be the most fresh pieces of news about the European economy. And also the European Central Bank meeting minutes will come out. We do not expect anything positive from that minutes. The ECB will likely stay cautious. But if Eurozone's PMIs are in line with forecasts or better than previous readings, then that might provide Euro with some help, as traders are hoping that the European economy finally starts to recover. On Friday, May 24th, Britain will release retail sales figures, and the United States will publish core durable goods orders data. These are the main events of the upcoming days. And of course, the markets will be following the news related to trade relations between the US and China. There may be some statements about that. In addition, pay attention to the fact that the elections to the European Parliament will take place on May 23rd. It will start on May 23rd and that will continue until May 26th. The European population will vote for the parties, and as a result, this may be a big market mover for the euro. Now it's time to return to the charts and to speak about technical and fundamental factors for the main currency pairs. So, having a look at the weekly chart of the euro dollar, we can see that euro once again found resistance on its attempt to get higher, and it closed the week below 1.12 mark. So it seems that the currency pair is now vulnerable because the trend line resistance is rather strong. The level to watch on the downside, the key level, is certainly the level of 1.11, and decline below that may leave us significantly lower. The risk, as I have mentioned, for the euro is high enough because we may see a total shift of power in the European Parliament. There is the risk that Eurosceptic parties will strengthen their positions, and that would be a very negative outcome for the euro. Italian Deputy Prime Minister Matteo Salvini had made a lot of negative remarks for the euro last week, which made the single currency turn down. He also said that the rules of the European Union harm his country, and things like that, if they intensify, will be able to push the euro lower. Here we can see the picture on the daily chart. The resistance is located in the area of 1.1180, 1.12. The other resistance is at 1.1240 and 1.15. The daily moving averages are slightly declining and limiting the upside for the currency pair. Support is at 1.1115 and 1.11, and the next natural target is the psychological level of 1.10. The pair British pound versus the USD made a great leap to the downside last week, and actually, if you check other currency pairs which involve the British pound, you will see the similar situation. The sterling made a broad depreciation versus other currencies as well, both Japanese yen, Swiss franc type of currencies, and currencies like Canadian dollar or the euro for that point. So the situation in Britain is rather gloomy. We can say that cross-party Brexit talks collapsed. There are concerns about the likely resignation of Prime Minister Theresa May, and if she resigns, that will likely lead to a no-deal Brexit, according to a lot of analysts. So this is why we see this dynamics in the British pound, and it's really hard to find something bright in this Brexit situation, because no resolution is on the horizon, and that surely is a negative thing. On the chart here, you can see that the British currency has topped versus the USD and formed a pattern which resembles head and shoulders, with the neckline around the level of 1.2890. So moving averages, the 50-week moving average is going down, and the 200-week moving average is also having a negative bias. So it looks like the rapid decline may yet continue. On the daily chart, we can see that the closest resistance is located at 1.2770. The pullback higher will lead us to 1.2890. Today we opened with a gap higher, but still it looks like the bulls do not possess enough force to reverse this steep negative trend. If we remain below the 1.2770 mark, the next target will be the next Fibonacci level around 1.2610. Have a look at the chart of the US dollar versus the Japanese yen. As you can see, a hammer-like candlestick was formed on the weekly chart, so some recovery of the USD is possible, although on the upside on the daily chart we see a great resistance area formed by the horizontal moving averages. They provide resistance as the pair approaches 110.60, then at 111 and 111.50 marks. All in all, the market risk sentiment is not really that positive. That caps the upside. Although the USD is a safe haven, Japanese currency is a safe haven as well. The positive impact was from the fact that Japanese economy unexpectedly accelerated in the first quarter, while markets expected contraction. Still, that didn't give the pair any kind of momentum, and the consolidation between 110.60 and 109 levels is likely in the upcoming sessions. US dollar Canadian dollar is another pair which is trading sideways. The resistance around 1.35 still stands, while support is located around 1.3380. So here range trading, sideways trading is the option for now. Canadian dollar strengthened recently as oil prices pushed higher, because the Organization of Petroleum Exporting Countries signaled that it will likely maintain production cuts. That is positive for risk currencies. At the same time, we get trade-related uncertainty, and that prevents the Canadian dollar from strengthening. So this kind of dual factors keep the pair in this sideways range. Australian dollar, as I have mentioned, was very volatile. There were some weaker than expected data releases from Australia, and the pressure related to trade tensions, which has a negative impact on the currency. We can see that it tested the support line from the lows of this year and then managed to recover. The recovery today happened as because of surprise election victory of the country's conservative government. Prime Minister Scott Morrison's centre-right Liberal National Coalition managed to win the election, and traders think that this will bring stability for the country's economic outlook and is good for business. The fact that left parties didn't manage to seize the power. In addition, China's central bank said that it would maintain stability of yuan within a reasonable and balanced range, and that is also positive for the Australian currency. There will be news related to the Australian dollar, as you have heard from the economic calendar. Still, as you can see from the chart, there is a very strong resistance in the 0.70 area, and buying will be possible only above that mark. And well, moving averages on the weekly chart still look very, very negative here. So given all the risks, the way to the upside will be difficult for the Australian dollar, and the best strategy might be to look for some opportunities to sell the Australian currency as it tries to get to resistance around 0.6940 and 0.70. The New Zealand dollar also suffered from the deterioration in the market's risk sentiment. So we can see that it pushed to lower levels, and previous lows in the area of 0.6470 now become inside here. The daily moving averages are about to form a negative intersection. So the attempts of the currency to advance will meet resistance. The first one is at 0.6540 and the next one is at 0.6585. Gold made an attempt to rise in May but was limited by resistance around 1,300. Then it turned down last week as the USD wins as the refuge asset. And if the Federal Reserve doesn't provide dovish meeting minutes on Wednesday, the decline below 1275.50 will bring the price of the precious metal to the area of 1266, and the next level to watch will be around the 200-day moving average around 1256 for gold. Finally, Brent oil managed to stay above 72.55, and there was an attempt of getting to higher levels as the on the comments from OPEC. The next level to watch on the upside if the support stance is 75, while the decline will bring the price to support located in the area of 70.45. This is all for today. Thank you for your attention and trade with Liteforex.